Welcome to Option Trades Today. I'm Tony the Baptiste, and I have a trade idea for you today. February 15th, 2024. Let's see what the market's doing. Even the S&P's up $1. NASDAQ down 75 cents. And the Russell up 21. Dow up 170. Russell continues to be the leader the last couple of days, with the NASDAQ getting a little bit softer in the market. Volatility 1520, up slightly, with the market unchanged to lower, meaning the NASDAQ, and maybe higher if you're looking at the Russell. Really, I look at it as volatility is unchanged, market's unchanged. Place your bets. Now, where am I placing my bets? Well, I'm going to take a look at my high option volume list. I'm going to save some time instead of scrolling through it. What we like to do here is look for stocks that have an IVX 5-day change that is in the green and an IV rank that is over 25, 30, in that 35 range or above. Tight liquid markets and no earnings looming. You'll notice here in QCOM on the bottom, a decent price stock, meaning a $155 stock, not a $700 or $800 stock, not a $50 stock. Up $1.44 today. It's had a decent range today. It's at the lower end of its range for the day. The IVX 5-day change, that's the monthly implied volatility over the last 5 days, is expanding. When you're selling premium, you want that volatility to be expanding, and the IV rank of 35 is good. I'm going to go to the trade page. You know what I like to do. I don't like to go to options I want to go to options that are closest to 45 days. We're kind of in no man's land here. I'm going to default instead of March with 29 days, because in 7, 8, 9, 10 days, I would be looking to roll this trade from March to April. I'm going to let the stock beat me. I'm going to have duration over direction on this trade. Qualcomm, when you take a look at it, has been on a tear the last couple of weeks, and you would think that I would want to get short this. You know what? I'm going to say let the stock beat me and play both sides. I'm going to use our research from today's market measure and go exactly what the research showed us. You go to around the 20 delta strike. The closest I can find with these $5 wide strikes would be the 140 put. And then I'm going to go up to the 175 call, which has an 18 delta. This is completely delta neutral with the stock at 166 right now. I actually got filled lower. You can get filled, because it's the bid, $3.59 is where I got filled on this trade. Its mid price is $361 right now. Plenty of open interest and liquidity. Prices are a penny or two wide. I would expect that you would get filled a penny off of mid price. It looks like mid price right now is 161, 162. I would imagine a 160 would be an easy fill. You would do better than me. You're using $1,555 in a margin account. But you know what? Not everybody trades in a margin account. This is a stock with an almost 30% monthly implied volatility that opens itself up to those in an IRA account or cash account where you have to basically put up full cash for the trade. Yes, on Tasty Trade, you can make this trade as a standalone trade, meaning a naked call option in IRA can be done in a Tasty Trade account. It just uses a lot more buying power. So let's be smart here. What I like to do is, in any account, simulate what my buying power is, or get close enough to what my buying power would be in a margin account to keep my IRA account ramped up, or cash account ramped up, acting just like a margin account. Now, remember, the credit here is $3.60. We're going to have to give something back to do this, but let me show you something here. By just making this a very wide iron condor or synthetic strangle, buying these 110 puts for 12, 13, 14, 15 cents, and going out to, well, I'll go out to the 210s just to make it 12, 13 cents, the same amount of premium on both sides. I cut my buying power down in an IRA account from $13,000 or a cash account to $13,000 down to $1,570, basically equaling what a margin account would do in an IRA account. That's ramping up your IRA account. You'll notice here that the probability of profit is quite high. I'm at both standard deviations, even with buying these wings with a 71% pop. I'm collecting $6 and change in theta decay. That's how much, all things being equal, if volatility doesn't increase or go down. If it goes down, it benefits me. But if it doesn't increase and time and the stock just sits right here, I make $6 a day for my risk of $1,500, almost $1,600. A delta neutral trade, less than 1 delta. My max profit is obviously what I am getting in credit. If I take these off and just show you the Strangle that I did, just to show you how those numbers change, they change ever so slightly from 71 to 72, $6 and change to $7 and change. It's still under 1 delta. My buying power is just about exactly the same. If you want to see this trade before you watch this either on YouTube or you watch it on our Tasty Live site, you can always go to the follow page in Tasty Trade. I always am Bob the Trader IRA, and I'm looking at here the QCOM trade. You'll notice I put the trade on when the stock was a little bit lower. I got filled at $3.59. That pop of 72% hasn't changed. There's the time that I put it on. It's a classic Strangle, using today's research, applying it to today's trading. All right, everybody. Here's a time where I ask you, you know what? Like the button. Subscribe to us, please. Do me a favor, though. Open, move, transfer your account to Tasty Trade. Get up to almost $4,000 for bringing your account, depending on its account size, to Tasty Trade. Read all the fine print. Send an email to support or give them a buzz. If you want to reach me, I'm Bat at Tasty Live. He is Tom at tastylive.com. You can always leave a comment in the YouTube comments there. I try to get to them each and every day. I appreciate your support. Thank you for helping us keep the lights on.